Welcome back to AOF Market Intelligence, powered by AI. You know we always bring you the latest insights, and today we're diving into something that's going to be huge for all of you real estate investors, sellers, and buyers out there.
Big is right. I mean, we're talking the Bank of Canada's interest rate decision.
And the big decision it was. They just announced a rate cut.
A full half a percentage point.
Yeah, bringing the policy rate down to 3.25%.
The lowest it's been since October 2022.
And get this news literally just broke today, December 11th, 2024.
Our listeners are getting this analysis piping hot.
Straight from the oven. But what's the deal with this sudden move? Why is the Bank of Canada making such a big cut now?
Well, we've been poring over the 24's analysis, and it seems like a couple of key factors are at play.
Oh, this should be good.
First off, they finally hit their 2% inflation target.
Oh, interesting.
They've been aiming for this for a while, and now they seem pretty confident that inflation is under control.
Okay, so inflation is tamed. But the 24 also mentioned some worries about the economy, right? Like it's weakening.
You're right on the money. The 24's analysis definitely points to a few areas of concern. GDP growth, for one, has been pretty sluggish.
Sluggish how?
Well, actually, GDP per capita has been declining.
Declining?
Yeah, for 6 straight quarters.
Oh, wow. 6 quarters in a row. So that's not really a good sign, is it?
Not exactly. Basically, it means each person is producing less value on average than they were before.
And what does that mean for, say, a real estate investor?
It could mean slower appreciation or even like stagnation in some markets.
Okay, so things might be slowing down a bit. Is there anything else our listeners should be aware of?
Definitely. The 24 also highlights rising unemployment.
Oh, that's never good. How bad is it?
It hit 6.8%, the highest it's been since early 2017.
Wow, so the job market is softening, huh?
Yeah, especially for young people and newcomers.
That's a tough break. So we've got this interesting situation, right? Inflation is finally under control, but the economy isn't exactly booming. What does all this mean for those of us who are, invested in real estate, thinking about buying or selling a home?
Well, if you're a potential home buyer, especially one who's been holding back because of those high interest rates, this rate cut could be a game changer.
Oh, how so?
Variable rate loans are about to become a lot more affordable.
That sounds promising. But hold on, wouldn't a softer job market make some buyers think twice?
That's a really good point. You always have to look at the whole picture. And the 24 does point out that fixed mortgage rates have actually already adjusted.
Adjusted, like in anticipation of these cuts.
Exactly.
So the market's already kind of factored that in.
Pretty much. So don't expect any huge shifts there.
Interesting. So this rate cut, it might not move the needle much on fixed rate mortgages, but for variable rates.
Yeah, that could definitely shake things up.
Okay, cool. Anything else the 24 is predicting?
Oh, get this. They think the Bank of Canada will actually keep cutting rates.
Keep cutting? Wow. How low are we talking?
Potentially as low as 2.5% by mid-2025.
Wow, that's a big drop. So what would that mean for, say, a real estate investor, someone who's already in the game?
Well, it might bring more buyers into the market, right?
Yeah.
Which could potentially boost demand. But here's the thing.
What's that?
It's not just about interest rates, as any seasoned investor will tell you.
Right. There are always other things to consider.
Exactly. Like demographic trends. Those play a huge role in the housing market, and they can be totally different depending on where you are in the country.
I see your point.
For example, Alberta.
Oh, yeah. Alberta's been doing pretty well.
They've seen really strong growth, mostly because of people moving there from other provinces.
So that interprovincial migration is really making a difference. Okay, so we've got lower interest rates potentially boosting demand. We've got these demographic trends with some areas seeing more growth than others. Anything else in the 24's analysis that stood out to you?
Actually, there is one more thing, and it's something we should all keep an eye on.
I'm all ears.
They talked about the potential impact of incoming U.S. tariffs on Canadian exports.
U.S. tariffs. Now, that's something I wasn't expecting. So to sum things up, we've got lower interest rates that could give the market a little push. We've got an economic outlook that's a bit uncertain. And now we've got this possibility of U.S. tariffs that could really shake things up.
You got it. It's a lot to process.
It really is. I think we need to unpack all of this a bit more.
It really is a lot like putting together a puzzle, We've got all these pieces, and we need to see how they fit together.
Right, to get the full picture.
Yeah.
And speaking of pieces, I think it's time to zoom in on some of those specific regional trends that the 24 highlighted.
Oh, yeah, definitely. Like we were talking about before, Alberta's real estate market has been holding up pretty well.
Yeah. Mostly thanks to all that interprovincial migration.
Right, all those folks moving there from other parts of Canada.
It's almost like a real estate gold rush. People packing up, heading west.
It's definitely having an impact on the housing market there.
I bet this is music to the ears of our listeners who are thinking about diversifying their real estate portfolios.
Oh, for sure. And this whole trend, it gets even more interesting when you compare it to what's happening in other parts of the country.
Oh, what do you mean?
Well, the 24 noted that overall consumer spending in Canada has actually declined.
Declined.
Yeah, on a per capita basis.
So while Alberta is seeing all these new residents and maybe even increased demand, other regions are seeing a slowdown in spending.
You got it. It's a pretty big contrast.
What does that mean for real estate investors who are already invested in those areas?
Well, it's a good reminder that real estate is hyper-local.
Hyper-local.
You know, what's happening on a national level is important, but what really matters is what's going on in a specific city or even a specific neighborhood.
Right. It's all about location, location, location.
Exactly. So even though those broader economic indicators might be sending mixed signals, a strong local market like we see in Alberta could still offer opportunities for growth.
You're absolutely right. It's never a one-size-fits-all situation when it comes to real estate. But hey, speaking of local trends, didn't the 24 mention something interesting about Edmonton's real estate market? I feel like they used a pretty catchy phrase to describe it.
They did. Edmonton's market is really heating up with both sales and prices climbing. The 24 even said that Edmonton has caught Calgary's real estate fever.
Huh. Real estate fever. That's a great way to put it. So what's driving this surge in Edmonton? Is it just the ripple effect of all that migration to Alberta? Or is there something else going on?
It's probably a mix of things, you know. Migration is definitely playing a role. But those lower interest rates we were talking about earlier are likely also enticing more buyers in Edmonton.
That makes sense. Lower rates make homes more affordable, which could lead to more demand. And when demand goes up, prices usually follow.
Exactly. Supply and demand, the classic economic principle. And with the 24 predicting even more rate cuts on the horizon, it'll be interesting to see how Edmonton's market responds.
Right. And not just Edmonton, but how other markets across Canada react as well. It's like watching a domino effect, you know. One change can trigger a whole chain reaction in the market. But let's shift gears for a second and talk about that potential wild card we mentioned earlier, those U.S. tariffs.
Oh, yeah, the tariffs. This is where things get a little less predictable. The 24 highlighted the possibility of the incoming U.S. administration imposing new tariffs on Canadian exports.
And, like you said before, that could have a ripple effect on the Canadian economy as a whole, which could then impact the real estate market, right? What are some potential scenarios that our listeners should be prepared for?
It's tough to say exactly what the impact will be, but anything that disrupts trade and economic activity can have consequences down the line.
Okay, I see what you mean.
For real estate investors, this means staying informed about how these tariffs might affect specific sectors and regions. If certain industries take a hit, it could lead to job losses and less demand in those areas, and ultimately, that would affect the real estate market.
So it's kind of a waiting game right now. We just have to see how things unfold.
Pretty much. We need more information about the specific tariffs being considered and how Canada might respond, but it's definitely something that both investors and homeowners should keep on their radar.
You're right. It's always good to be prepared, even if we don't have all the answers yet.
Exactly. Being informed is so important, especially in a market as dynamic as real estate.
Couldn't agree more. This has been a fantastic deep dive into some really important trends and developments. We've covered a lot of ground, from the Bank of Canada's rate cut to regional trends to those looming U.S. tariffs. I think it's time to take a step back and recap the key takeaways for our listeners before we wrap things up. Okay, Vicky, let's do a quick recap for our listeners. We started with that big news from the Bank of Canada.
That surprise rate cut, down to 3.25%.
Which, if you're thinking about getting a variable rate loan,
could be a really good opportunity.
Exactly. But we also talked about how those fixed mortgage rates have already adjusted.
Yeah, so don't expect any major changes there. The market's already one step ahead.
Always good to remember that. And of course, interest rates, they're not the only thing driving the real estate market, right?
Definitely not. We spent a lot of time talking about those demographic trends.
Like all that interprovincial migration.
Especially in Alberta.
It seems like everyone's heading west these days.
Which is great news for anyone invested in real estate in those areas. But it also highlights how important it is to understand those local dynamics.
You're right. What works in one market might not work in another.
Exactly.
Edmonton, for example. They've caught real estate fever.
Love that phrase.
But who knows if that fever will spread to other parts of the country?
We'll have to wait and see.
Speaking of waiting and seeing, we can't forget about those potential U.S. tariffs.
Ah, yes, the big question mark hanging over everything.
We don't know what they'll look like or what kind of impact they'll have on the Canadian economy, but it's definitely something to watch.
Oh, sure.
So for our listeners who are real estate investors, potential buyers or sellers, what's the big takeaway here?
I think the main thing is to stay informed and be ready to adapt. The market is constantly changing, and there are always new challenges and opportunities on the horizon.
Couldn't have said it better myself, Vicky. And speaking of challenges and opportunities, the 24 ended their analysis with a really thought-provoking question. They asked, how much do you think population growth impacts real estate demand?
What a great question. We've seen how lower interest rates can potentially boost the market, but population growth is a big factor.
A long game, right?
Exactly. So what do you think? Head over to our website or social media channels and let us know.
We'd love to hear your thoughts. And that brings us to the end of another episode of AOF Market Intelligence, powered by AI.
Thanks for joining us.
Until next time, stay informed, make smart choices, and as always, happy investing.